But we begin tonight with the labor market. Wall Street was closed for Good Friday observances, but the government was open for business and released the March jobs report. While not common, it has happened before. Since 1980, there have been 11 occasions when the March jobs report was released on Good Friday, including more recently in 2012 and in 2010. And even though there was no trading today, Steve Leisman was hard at work sifting through the numbers.
The government reporting a very weak job number for the month of March. In fact, it was the weakest number since December 2013. It broke a string of strong numbers that goes back to March of 2014, all of which were above 200,000. Not this time. Payrolls coming in at 126,000 versus a consensus of 248,000. The unemployment rate, though, did remain unchanged at 5.5%. February and January both revised down sharply, losing a combined 69,000 jobs in the revision. One bright spot, average hourly wages were up 0.3%, which beat consensus. Some analysts say that the weak number went right along with a softening of the economy in the first quarter and some weak economic data.
I think the report is mostly disappointing. It's not bad news. It's certainly not surprising news, especially considering the tone of corporate America coming out of fourth quarter earnings and really what we've seen in terms of estimates coming down for the rest of the year. So corporate America is retrenching a little bit. We had bad weather in February, March. We know the story already, so not too surprising.
Among the sectors that lost jobs were manufacturing and construction, maybe a sign that weather played a role, but there was also an 11,000 jobs decline in mining, a sign that lower oil prices were taking a toll on jobs in the oil patch. With places where there were job gains, retail, professional and business services, and the perennial job gainer, healthcare. Question is whether the Fed looks through this number or does it give it pause in enacting the first rate hike in 9 years expected this year. Markets certainly thought so, with bond yields declining and the dollar also weakening. Markets get their first chance to look at the jobs number and to react on Monday. For Nightly Business Report, I'm Steve Leisman.